Yep, going live soon. I'll change this. You are now live. It says, okay, hi, Facebook. Depending on whether the internet connection is working, you should see a bunch of faces on your screen. It's time for another Morning Mix Social. This is where we hop on social media and take a deeper dive into some of the things that you may have seen on the Fox 17 Morning Mix. And as you can see on your screens right there, we've got Jeff from Eastbrook Homes. Hi, Jeff. Say hi. Wave, everybody. There you are.
Hello.
And then a Luther, who is from LMCU Credit Union. I guess that's redundant, isn't it?
Hello.
Credit Union. There's Luther, who is a mortgage officer, answering your questions about how much money to put down when buying a home, what PMI is, how much money are you going to need, all of those things. So I'm going to say goodbye to you for a second, Jeff. We'll come back to you in a second. All right. Bye, Jeff. See you, brother. And I'll get rid of this, and then we'll go right here and change up our screen. Hi, Hi, Luther.
Good morning.
Why don't you introduce yourself and tell people who you are, what you do
Sure.
for Credit Union.
Yeah, hey, and thanks for having me this morning. Again, my name is Luther Trook. I work at Lake Michigan Credit Union. I am a mortgage loan officer here. I've been here for about 15 years now, about 20 years in the industry, but 15 years here at Lake Michigan. It's been a great company, a lot of great products they offer here, and just a great reputation in the community.
And we're going to dive into some of those as well. Hopefully our internet connection holds true today. When it comes to, you specialize obviously in helping people get into homes. Can I start with a quick question? Do I have to have 20% down?
Yeah, that's a great question. And honestly, recently that's kind of changed with COVID in 2020. Some lenders have actually reduced the amount of money increased the amount of money needed to get into a home. Some banks, for example, some national banks require 20% down. Lake Michigan Credit Union has not really changed their lending parameters. So 5% down, even as much as 0% down, as little as 0% down is doable for most customers.
Okay, so people always, when they're growing up, we're hearing that 20%, but that's not necessarily the case. But if you don't have that 20%, you are going to be dealing with PMI. Define what PMI is for us.
Yes, kind of a dreaded term, I think, for most of consumers.
That's a line, right? Yeah.
Yeah. But there's a lot of misconceptions, which I will probably get into a bit here as well. But PMI technically stands for Private Mortgage Insurance. It's not necessarily something you want to pay, but it's a means to an end. So to your point earlier, Todd, about not having 20% down, most of my customers do not have anywhere near that. They have 0 to 5% down. So PMI really is a means to an end. It gives you an opportunity to still take out a mortgage because the banks are going to require you, the consumer, to pay PMI, which is a small fee, in some cases very small, in some cases a bit larger, that allows the bank then to lend over that 80% limit. Why? Because it does protect them. Private mortgage insurance, or PMI, protects the bank, not the consumer. It protects the bank from instances like foreclosure, which we saw, over 10 years ago now.
And when it comes to that PMI, first off, I should put a little bit of focus on what you just said. The majority of the customers that you have are putting 0 to 5% down. So if you're out there and you're looking for that next home or that first home or that last home, and you're thinking of what to put down, it's okay to have 0 to 5% down as long as you understand that private mortgage insurance is going to be involved. And as he really said, it's that 20% threshold, right? That turns that off. So let me give you a scenario. Okay. Oh, we lost him. But internet connection happened. That's okay. I've got somebody else right here we can talk to. And that is Jeff. Hey, Jeff, how are you?
Good, sir. How are you?
I'm well. Thanks for asking. Internet's being really wonky today, so hopefully we'll be able to get Luther back here in a second. So when it comes to Eastbrook Homes and the relationship you have with Lake Michigan Credit Union, we just learned what PMI is, but there are some misconceptions and some fears with PMI. When you're putting somebody into an Eastbrook home and they bring up this talk about, well, I only pay so much to rent. What is this added extra charge, that I have to pay for? Mm-hmm. How do the numbers add up? I mean, is it still feasible to purchase rather than rent?
Oh my gosh, absolutely. First of all, thanks again for having us. We do appreciate it. My goodness gracious, rent has gone through the roof. I mean, it really has, literally. Some of the rentals here in the West Michigan area are as much as a single family home, without question. And all that money is going to the individual that you're renting from, rather than you building up any equity in your home that you can go and sell at some future date. And so the difficulty, again, is getting the monies put together so that the lender will allow that. We do a lot with Lake Michigan Credit Union. We do a lot with both Becky Sims and Luther Trook. They're kind of our go-to people. We like to keep things local, and they just do an outstanding job for us. And so it makes it really nice to go through those people. Luther is very knowledgeable, but we also assist in saying, we need 10% down as a builder. That's kind of our threshold, our requirement. Now, we don't want to scare people away. There are instances where they don't have that money, and we're certainly looking to listen to what those ways are. But for us, as you know, prices are continuing to rise between when we started this broadcast and when we finish this broadcast. Prices are going to rise. And so we as a builder require 10% down. Well, if you're building a $300,000 home, you give me $30,000. I'm on the line for the rest of that as a builder. And so that's why we require money in it. We want something where we know this consumer is not going to walk away from it. And so, again, we get the pre-approval letters through Luther. It's in good shape. If you can get to 20%, yes, correct. You don't have to pay PMI. But PMI is not like RIP, rest in peace. It's something that's out there. It shouldn't scare people. It's just something that's part of life. And Luther's right. It does protect the bank. But you can also, throughout the life or the longevity of your home, reassess where you're at and have another appraisal done. So you can get, without having to pay all that money in, another appraisal and says, I'm at 20%, and then that will drop the PMI off. So there's ways around it.
Definitely talk to Luther about that in once we get him back, and I do believe I see him back in the queue. But this is a fairly what is the range of private mortgage insurance? How do they determine how much money you're going to have to pay? Is it a lot of money each month for PMI?
On average, it's between $50 and $70 a month. And again, it's money that goes directly to the bank. It does not come off your loan amount, your interest rate, or anything like that. It's just money that goes to the bank because they are trying to protect their asset. Again, they're on the line for whatever dollar amount you purchase on that home, and it varies based on the price of the home. Luther will be a little bit more versed as to exactly what that dollar amount is. But yeah, it's between 50 and 70 is pretty much what I've heard with regards to it. But I also have a lot of people that have bought from me 4 and 5 and 6 years ago say, hey, Jeff, what are the prices now? I bought this house. I paid this much. What are you selling it for now? And the reason they're doing that is they want to go back to the lender and say, let's get another appraisal. Let's get rid of this PMI. And so there's ways to do it.
And I'm going to talk, I suppose, with Luther a little bit more about that, those appraisal methods, because we had a couple of questions that we want to throw your way. Jeff, hang tight. I'm going to bring him back in, and we'll come back to you. So let's bring in Luther one more time. Hey, Luther. Hopefully we got you. No, that's not your fault at all, my friend. That is pure internet doing what internet does. So let's talk a little bit, Luther, about this. Jeff just brought up a good scenario. Let's say I have a $200,000 home, okay, and I've put $0 down on it. I got finance, got great credit. Okay, so here I am. I have to get to, let's see here, 200,000. You're talking 20% is $40,000.
Right.
All right. So I have to pay that house down to about $160,000 for me to get rid of the PMI, so I don't get that added charge to protect the bank.
Right.
Let's say I buy the house, and a year later, home values have skyrocketed in my neighborhood, and as Jeff was talking about, there's an appraisal. If the value of the home is appraised at 238,000 or whatever, and I'm at 198. I mean, I've made that 20% up just by appraisal. Can PMI be removed early because of that?
Yeah. Jeff brings up a good point there, and the answer to that is yes, but there are caveats to it. So, for example, with LMCU, and this could vary from lender to lender, but with LMCU, for example, you do in your scenario, hey, the customer buys the home this year, and they put 5% down.
Okay.
Next year, with the way that the Grand Rapids market is appreciating, they very well could have 20% equity in the home. The credit union standpoint here is you have to have waited 2 years and have 25% equity in the home if you are trying to remove PMI based on an appraisal that the customer would pay for. So again, 2 years and 25% equity is the first threshold. The second threshold is 5 years and 20% equity. again, we're specifically talking just about removing PMI with the customer ordering an appraisal. LMCU ultimately would order it, the customer would pay for it. But that is the way to get rid of PMI without putting any more money down other than just your minimal monthly payment.
And what's an average cost for an appraisal?
About $400.
Okay, so you're thinking to yourself, I want to save this money. It's going to cost me $400 to get it appraised, and then that appraisal has to come in at that above 20% threshold or 25% threshold. Now, you're mentioning with LMCU, 2 years is the minimum. You got to be paying on it for 2 years to even consider, right?
Based on getting rid of PMI with an appraisal, yes. Of course, the customer can pay principal down to get to 20% equity, and boom, it's gone. The other, I guess, strategy would be that you could look to refinance the mortgage. Refinancing a mortgage, even 1 month, 2 months, 1 year, it doesn't really matter the timeline. That resets everything. So you could theoretically get rid of PMI. Granted, you have refinance charges, which you have to weigh into the conversation.
Sure.
But you could certainly eliminate PMI that way as well.
There's a lot of math here. There's a lot of math going on.
There can be.
You also mentioned 5 years or 20%. If you're just paying the base or whatever, and you're trying to get rid of PMI without paying it down to that 20% threshold, 5 years. Is there an average length of time that someone typically pays PMI? Yeah,
the average length, if they're making the minimum payment, for example, on a 30-year loan, would be about 8 years. Okay. Again, if you're just making the minimums, if you're making additional principal payment, you could plug that into what's called an amortization table, and that will tell you, hey, when am I going to arrive at my 20% mark? Mm-hmm. I think for the consumer, it's important to know what number do I need to pay my mortgage down to reach that threshold? Because technically, PMI does not fall. If you start with PMI, it's not going to fall off until you've reached 22% equity in the home. The bank will automatically eliminate it at that point. But once you reach 20% equity in the home, you are eligible. So you want to keep an eye on what is that benchmark. And I'm going to call LMCU and get rid of that PMI because they have to request it. Not that it's going to be that much longer. You'd pay it anyway.
Sure.
You'd want to keep an eye on it.
Every dollar counts. So
That's right.
That's 20%. And I'm assuming there are tools online at your website, like this amortization table that you're talking about, where people can plug in their numbers, or do they need to call?
That's a little bit more personalized because, they could I just have a spreadsheet I could certainly send them, or I can do the math for them and let them know, hey, where do you need to be at? If I make extra payments, how soon will I arrive at that number? But again, simple math would be, what was the sales price of the home times 80%? That's the number you need to make to end up at.
Perfect. All right. Well, let's talk about next steps. I'm going to bring Jeff back in here as well, who's been patiently hanging out for us. Thank you so much. I appreciate that. So let's talk a little bit, Jeff and Luther together, about next steps for someone who may be watching this on social or catching it later. They're looking into home loan options, a refi, a new purchase, maybe looking for a retirement home. What's the next steps, Jeff, for someone who's looking into home loan options? Who should they start with?
Well, the home loan options, again, we our preferred lenders are Lake Michigan Credit Union, and we have the business cards and we hand them out from there. We don't get very heavily involved in that. Luther and Becky are, again, better versed at that with regards to what's the correct product for you, because it really comes down to the monthly payment. We want these people not to be house poor. That's not our goal. That's not what we're trying to do. But again, Luther can say, listen, based on your income, based on what we've got, based on the longevity of your job, or possibly looking at future promotions, the kids are out of the house, my wife's going to go back to work. Guys, we can structure this now in such a way where here's your payment. And in 2 years from now, we can relook at this and say, what makes sense for you and your family? And so, again, we really defer to them with regards to that, sir. Yeah.
And Luther, if somebody's hearing this and they're thinking, okay, I need to contact someone at LMCU, preferably, maybe you or Becky.
Sure. Yeah.
What do they need to bring with them? Do they need to bring all this paperwork, or what do they need?
Yeah, as far as documents, honestly, nothing to start with. To Jeff's point, if Jeff sends it to Becky or I, we both do a great job for them. A lot of people think you need to have W-2s, pay stubs, tax returns, the whole gamut of documentation that you can think of. None of that's really true. Obviously, it's nice to have that, but literally they can simply call Becky or I. 15 minutes later, I've run through questions such as, where do you live? Where do you work? What's your income? What are your assets? We look at credit. Jeff needs to know, and Eastbrook needs to know, where do they stand? If Jeff doesn't have that information from us, he can't really make a decision with them as far as from a price point perspective. So I don't need any documentation. I need 15 minutes of your time, or you can go to lmcu.org /Luther Truck or /Becky Sims, and you can apply on there. And then boom, 15 minutes later, I'll have Jeff a pre-approval letter. I'll have an email off to the customer or a phone call telling them these are the parameters you can work within. They go to Jeff, then Jeff can make a better decision for them and kind of customize their build based on that.
It really is a true partnership between Eastbrook Homes and LMCU to help homeowners or potential home buyers to get through this sometimes confusing math. And these are the professionals. These are our trusted advisors that we turn to. So I want to thank you, both of you, for taking the time out of your afternoon to spend some time on a Morning Mix Social. What did we learn? Well, you don't have to have 20% down like your parents told you. Okay. 0 to 5% is the norm for most people. But if you do that, you will be dealing with private mortgage insurance. And as Luther explained, there are ways to knock that out sooner. It sticks with you on average, as he said, about 8 years. So if you want to get that down sooner, lose that extra payment that the bank is getting to protect themselves from foreclosures, there are ways that you can do that. Any questions that you have, feel free to put in the comments section. We'll put them out there. We'll see if we can get answers for you. These social Morning Mix Social segments are meant to take a deeper dive into really answer personal questions. Speaking of, gentlemen, you've had plenty of time to ponder the question I gave you off air before this. So we'll end this social with you, Luther. Would you rather fight 10 duck-sized horses or 1 horse-sized duck?
I'm going to go with the 10 duck-sized horses. I just think my chances are better.
A lot of little kicking. What about you, Jeff?
No, I'm going the opposite, man. I want one guy so I can see where those 4 legs are, or 2 legs in this case, I guess, and just know exactly. If I'm going to get kicked in the head, I've only got 2 options there rather than 20. So, no, I'm going the 1.
I don't know. I would have to side with Luther on this one. That's a really big beak. I mean, that is a really big beak coming at you. Guys, thanks for the fun. Thanks for the show. So we appreciate you guys being with us.
Thanks, guys.
Thanks, Todd. Appreciate it.
Luther and Jeff. Again, that is Luther of Truck from LMCU. And then you've got Jeff Costello, who's the Eastbrook home sales agent that we all know and love. And of course, thanks for joining us on another Morning Mix Social. We hope that you enjoy these segments. Please, if you have any questions and you missed the live broadcast, put them in the comment section and we'll try to get them answered for you. Until next time, see you.